Today is Friday, July 15, 2022. Let us take a look at today's crypto headlines. 2 Bitcoin price prediction polls, same outcome, $10,000 BTC is coming. Save the date. Ethereum's groundbreaking merge now scheduled for September. Bitcoin whales still hibernating as BTC price nears $21,000. Bitcoin is now in its longest ever extreme fear period. DeFi token Aave faces major correction after soaring 100% in a month. Please like, subscribe and turn on the notification button to keep supporting our channel. Save the date. Ethereum's groundbreaking merge now scheduled for September. The main event Ethereum fans have been waiting for several years could just be around the corner. During a Thursday conference call, leading Ethereum developers offered a fresh tentative date for the merge, the blockchain's transition to a proof-of-stake (POS) consensus model. Ethereum on track for switch to proof-of-stake on September 19. According to Ethereum Foundation developers, the merge could be roughly 2 months away. Speaking at a conference call on Thursday, Ethereum core developer Tim Bako revealed that the network's move to POS was now tentatively scheduled for September 19. Other core developers did not object to the new estimate. This merge timeline isn't final, but it's extremely exciting to see it coming together, Ethereum Beacon Chain community health consultant Superfizz.eth later tweeted. Please regard this as a planning timeline and look out for official announcements. The Ethereum merge is a much anticipated upgrade that will fuse the current consensus layer with the new proof-of-stake Beacon Chain, which went live in December 2020. The merge is expected to shift Ethereum from the energy-intensive proof-of-work consensus mechanism to proof-of-stake and decrease ETH issuance by around 90%. This will effectively make the network 99% more environmentally friendly. Ethereum executes latest shadow fork ahead of merge. The network has been undergoing a series of test forks in preparation for the merge. Just last week, Ethereum's Sepolia testnet completed its merge. Superfizz.eth penciled on August 11 for the final trial on the Goerli public testnet. After the deployment of the 9th shadow fork yesterday with no significant glitches, the outlook for a September mainnet merge now looks more likely. It's worth mentioning that moving the Ethereum network from proof-of-work to proof-of-stake has suffered several delays over the years. With the pressure escalating, Ethereum's developers will be keen to ensure the network's most significant update to date is implemented flawlessly. The price of ETH has risen by 13.38% over the past 24 hours. Bitcoin whales still hibernating as BTC price nears $21,000. Bitcoin price recovers 11% from the week's lows as one trader targets $21,700 next. Bitcoin, BTC, hit $21,000 for the first time in several days on July 15 as markets enjoyed what one trader called summer relief. Altcoin rebounded as BTC price adds 11%. Data from InTradingView showed BTC/USD grinding higher overnight to just tap the $21,000 mark on Bitstamp on the day. A noticeable change of tact had set in after initial losses on the back of 40-year highs for the United States Consumer Price Index, CPI. Versus the July 13 lows, BTC/USD was thus up 11%. Summer relief time, Cointelegraph contributor Michael Van de Poppy summarized. Popular trader Crypto Tony was also in the mood for modest optimism on short timeframes, eyeing a move to $21,700 for profit taking. If we get this, then alts can continue to enjoy a nice pump and relief rally. He added in a further tweet. Many major altcoins had responded well to the uptick in BTC price action, with Ether, ETH, making a noticeable rebound to cap over 12% daily gains. Others in the top 10 cryptocurrencies by market cap also fared well, with only Solana, SOL, nonetheless managing to beat ETH over the past 24 hours. ETH/USD thus succeeded in avoiding a return below the psychologically significant $1,000 level. Whales waiting for moment to wake up. Meanwhile, on-chain data suggested that the largest Bitcoin hodlers were in no mood to act at current prices. In a Twitter thread on July 14, BlockTrends analyst Caio Oliveira highlighted what he described as hibernation continuing among whale wallets. Whales remain in hibernation, waiting for the right moment to wake up, he observed. Institutional movements, or commonly called whale activity, can be tracked based on the transaction volume moved over a short period of time, both denominated in BTC and USD. An accompanying chart showed a distinct lack of large volume transactions on the network in recent months, with only the Terra Luna blowout causing a temporary trend break. Here we have a clear view of the low institutional activity, almost non-existent after the month of May, which was briefly awakened during the Luna crash but which returned to hibernation, Oliveira added. 2 Bitcoin price prediction polls, same outcome, $10,000 BTC is coming. While a classic technical indicator could be hinting at BTC price falling below $13,000 as well. Bitcoin, BTC, investors in China plan to buy the dip despite an ongoing market correction and a nationwide crypto ban, a new survey shows. Consensus sees Bitcoin at $10,000. A survey of 2,200 people conducted on China-based social media platform Weibo found that 8% would buy Bitcoin when its price hits $18,000, according to Wu Blockchain. While 26% of the respondents prefer to wait until BTC reaches $15,000. But a majority anticipated the price to fall even further, with 40% saying they would buy BTC at $10,000. In a survey of more than 2,200 people conducted in Chinese crypto community on Weibo, 8% of the voters believed that Bitcoin and Ethereum could be buy the dip when the price reached $18,000. 26% will buy in $15,800, 40% will buy in $10,500. Chinese investors more cautious on Bitcoin than US. Interestingly, another survey conducted by Bloomberg Live Pulse earlier in July yielded a similar outcome, with 60% of the net 950 respondents on Wall Street calling for a $10,000 Bitcoin price. The two polls show a striking similarity in the bearish sentiments of crypto speculators in the United States and China. Nonetheless, on-chain activity shows that investors in the US have been more bullish on Bitcoin versus their Asian counterparts since June 2022. In particular, Bitcoin's month-to-month price change, which tracks the 30-day change in the regional BTC price, has been positive only during US sessions. Conversely, the metric has only been negative during Asian trading hours, data from Glassnode shows. Technical indicator hints at BTC price below $13,000. Simultaneously, weakening technicals are also starting to support further downside, particularly on the larger 3-day time frame. Bitcoin has been forming a potential bear flag pattern that could result in a drop below $13,000 by September, as illustrated above. Persistent macroeconomic headwinds for BTC/USD continue to fuel bearish arguments against increasing evidence of a possible price bottom. Bitcoin is now in its longest ever extreme fear period. 70 days of straight extreme fear shows no end in sight as Bitcoin price action stays wedged around $20,000. Bitcoin, BTC, may have avoided fresh losses since falling to $17,600 last month, but the sentiment is on the floor. Now, one classic crypto market mood gauge is showing just how long and hard the average investor has suffered. 70 days of extreme fear. While crypto market sentiment was already comparable to funeral before the start of 2022, the subsequent price drawdown in Bitcoin and altcoins produced cold feet like never before. This has now been quantified by the Crypto Fear and Greed Index, a tool that takes multiple sources into account to create an overall score of how the markets are feeling. As of July 15th, Fear and Greed has spent 70 days in its lowest bracket, extreme fear, marking of a new bearish record. The index consists of 5 such brackets, with the others being fear, neutral, greed and extreme greed. A score below 25/100ths on its normalized scale corresponds to extreme greed, and it is that score zone that has characterized the past 2 months. The last time that the market was more optimistic than extreme fear was on May 5th, days before the Terra, Luna, now called Terra Classic, Lunk, debacle. Commenting on the data, Philip Swift, creator of on-chain analytics platform LookInABitcoin, noted that this extreme fear period is longer than even those surrounding the 2018 Bitcoin bear market and March 2020 cross-market crash. 2022, despite its bearish overtones, has nonetheless not been without its exuberant phases. The last time that the index was in its greed or extreme greed zone, which tends to suggest an overheated market, was in March this year. Research eyes sign of potential breakout. Looking to what could aid Bitcoin and altcoins recovery, research firm Sandman, meanwhile, believes that crypto correlation to traditional assets must come down. While already dropping, BTC must continue to strike out on its own and avoid the knee-jerk reaction to central bank monetary tightening over inflation. Crypto grows at its most rapid pace when having very little correlation with equities, it argued in a Twitter post on July 14th. After yesterday's CPI report, $BTC and alts have been recovering while the SP 500 and gold drop. If they stay uncorrelated, it's a good sign of a potential breakout. A more striking inverse correlation to I has been between crypto and the US dollar, currently near 20-year highs against a basket of trading partner currencies. The US dollar index, TSI, continues to trade at around 108 after hitting multiple peaks throughout the week, data from TradingView shows. DeFi token Aave faces major correction after soaring 100% in a month. More than 50% of Aave's recent gains appeared after Aave companies proposed to launch a native stablecoin. The price of Aave, has more than doubled in a month, but its bullish momentum could be reaching a point of exhaustion. Aave price test key inflection level. Notably, Aave has surged by over 103% after bottoming out locally at $45.60 on June 18, hitting almost $95.50 this July 15. Nevertheless, the token's sharp upside retracement move has brought its price closer to the level that triggered equally sharp pullbacks since early June. In other words, Aave has been testing an ascending trendline resistance that constitutes a bear flag, a bearish continuation pattern. For example, the trendline's previous test on July 9 ended up in a 20% downside move. Similarly, a similar attempt on June 24 pushed Aave price lower by nearly 30%. As a result of this distribution behavior, Aave's ongoing attempt to break above the flag trend line could meet with extreme selling pressure. A pullback could then see Aave/used retest the flag's lower trend line near $67.75 as its downside target by September, down almost 30% from July 15th's price. Meanwhile, the $76.30 level serves as interim support, primarily due to its history as a price floor in May that preceded a 60% rebound move. Bear flag breakdown scenario. As a rule of technical analysis, the breakdown below $67.75 could see Aave plunging by as much as the height of the flagpole that formed before the bear flag. That would have the token $35.50 as its bear flag profit target, down over 60% from the current price. Conversely, a continued rebound move above the bear flag's upper trend line would invalidate the breakdown setup. In this case, the bullish target for Aave will likely be the $115-$120 range that served as resistance in June. Go stablecoin. More than half of the gains during Aave's price rally have come after its proposal to launch a US dollar-pegged stablecoin called Go. On July 7, Aave Companies, a centralized entity that backs Aave's lending protocol, requested its community to vote on their over-collateralized stablecoin proposal. Aave's price surged by over 53% afterward, led by speculations that Go would boost the DeFi token's adoption. However, any further gains would risk pushing Aave into overbought territory with its daily relative strength index, RSI, trading just 5 points below 70 as of July 15. Rising above the 70 threshold could push Aave's price into a correction phase, likely triggering the bear flag scenario as discussed above. Don't forget to like, subscribe and turn on the notification button so that you won't miss any updates.